Siamo di nuovo qui sul floor del New York Stock Exchange, siamo al ribasso, ancora sicuramente l'attenzione è rivolta all'Europa. Ne parliamo con il mio ospite qui sul floor che è Mark Otto, che è Designated Market Maker per Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me on.
So Mark, we are going down today, at least at the opening. What are we looking at today? Europe, I guess, is still the focus of the attention.
Absolutely. I think that all eyes are back. The focus has gone back to Greece and what's going on and developing situation there. It seems as though they've hit a wall between the IIF negotiations for the private sector and what the needs of Greece are. It seems as though they're trying to negotiate, whereas the IIF agreed back in October to a 50% haircut. When you look at all the data and they're talking about coupons and percentages and roughly between 3.5% and 4.5% on this coupon, when you put it all together, really what they're expecting the IIF to take is more of an impact of approximately 65–70% when all is said and done. However, the IIF is resistant because some of the reports that I'm seeing is that a lot of the hedge funds, they've bought default swaps. So if Greece defaults come March 20th on the 14.5 billion in euros that is due then, they're still going to continue to get paid. So it's not really a motivation for them to get more involved and take more of a haircut than they've already agreed to.
Absolutely.
Yeah.
And you're seeing a very interesting movement in financials. Let's remind that you trade, you are following all the ADRs here, yes. Foreign ADRs on the floor. So tell me about it.
I do trade the foreign risk for Knight, so I have South America, Europe, and in Asia. I do have exposure to the Eurozone directly. I can't go stock specific, but I can tell you that I've been watching the ADRs that are shares that trade here that represent ordinary shares in the home market, specifically in the Eurozone financials. It seems as though as far as these negotiations have gone on for the past week, there's been a steady rise in these ADRs, these financials out of the Eurozone, as it seems as though there was positivity behind them reaching an agreement. However, today, this entire sector is down between 7 and 10% across the board. So obviously the momentum and the mentality has changed behind what's going on over there.
Now coming back in this country, absolutely today it's a very important day, the first FOMC meeting of the year. Yes. Do you really expect anything big announcement tomorrow? There has been a little bit of buzz around at QE3.
Yes, I am reading hints of that. However, I think that Chairman Bernanke is certainly set the table for himself. He's come out and said that he wants more transparency as far as rates are involved here in the U.S. So I think the traders are going to look for more of a picture of what's going on going forward with rates. I believe that traders are looking for, they've already been told that rates will remain near zero through 2013. However, reports now indicate that most traders think that it's going to be around 2014 before we could see a rate increase. So hopefully we're going to see some transparency on that front. The President's State of the Union address is tonight at 9 p.m. Eastern Standard Time. Of course, most people are going to be looking for his next jobs initiative, and he's going to be speaking about the housing sector. He's also going to make the pitch for his hopeful next inauguration to be re-elected. It's going to be a little difficult sell on his part as far as the unemployment rate here still remains low. People are impatient about the pace that the economy is coming back. So I think that we're going to be looking for anything that hints at that going forward.
Great. Mark Otto, thank you so much.
My pleasure. Thank you.